Thanks for tuning in again, everybody. We're back with your favorite podcast, Luca's Tigers and Bronze, oh my.
My first career was on Wall Street. My first job in 2012 was Morgan Stanley. Yep. And I got the privilege to see the behind the scenes aftermath of, the financial crisis, the Dodd-Frank Act. And today we have a really, really special guest that I think is going to teach you guys a few things and share a lot about what the hobby is going to look like in the next 5-10 years. You guys got to understand, when it comes to working on Wall Street, what I found is, there was all these terms, all this jargon that they made really, really, really confusing, but there were so many overlaps to sports cards, collectibles, crypto, and just the financial industry. I felt as a whole was changing. And it was really an interesting time at this 2012, 2013, when this Dodd-Frank Act passed, and it kind of shook up the industry in a lot of ways. And today we have Ezra Levine with us. He's the CEO of Collectable. It's a fractional share company. And before today's episode, I was doing a little research, learning, because I myself don't know this business that well. I don't know the fractional share business, but I want to learn it. And I love the line, and I want to introduce you here, Ezra, with this line right from your website. And I think it was so spot on. And he said, we believe investing doesn't have to be intimidating, confusing, or filled with insider jargon. Collectable is reimagining sports collecting and investing, a long overdue modernization of a timeless tradition. I love how you worded that. And with that, Ezra, I want to welcome you to the Luca's Tigers and Bronze Oh My show.
Thanks, guys. Yeah, look, I think that line on our site really sums up what we're trying to do, right? All of us on our management team are really passionate about the hobby. We're really passionate about bringing access to an industry that all of us love. All of us think there's a lot of potential, a lot of growth potential in it. But if we're being honest with ourselves, there's some really major flaws. And one of the major flaws that we've seen is, particularly at the high end of the marketplace, it completely prices out a large amount of people who would love to participate in it. And there are other issues, like it hasn't been overly liquid. The best assets are highly concentrated in few hands. There are bloated fees, there's bad actors, there's a lack of transparency, there's a dearth of data. There's all these issues that, in our opinion, are preventing the hobby from being really the juggernaut that I think it will be, and it should be, and it could be. So we're here to bring access, to bring transparency, to bring a new way of collecting, and really just to grow this hobby that all three of us in this podcast really love and think is going to be massive, right? So we're ecstatic about being here. I'm happy to talk really from the ground level about what fractionalization is, what Collectable is. But again, thanks for having me on, and let's get rocking and rolling.
I love it. And I'm going to turn it over to you, Cage, because I'm going to learn during this episode more than I speak. But listen, from my perspective, it seems like Ezra stands up for Joe the plumber. He's able to help. Like, for me, we always talk about this, Cage. Yep. Let's make it. Anyone could go and buy a Topps Chrome. We know that that's the way to go. Topps Chrome LeBron. But most average Joes can't afford that. Yep. And it sounds to me, just from my perspective, it's that Collectable stands up and gives the opportunity for average people, and I say that quote unquote, average people that have average bankrolls, to buy in and hold some of the best assets in the world. So
I'll tell you, what it makes me think of, and this will be a cageism here. I'm a dad, so I'm sorry, guys. I'm often the guy in the room that's the old man. But Disney made a movie a little while back called Ratatouille. Right, it's a rat that cooks. He's like a chef, the little chef, and the restaurant he works in, it's called Gusteau's, and he's got this saying. It says, "Everybody can cook." Right, everybody can cook. Well, the sports card market, it's a snob market, man. It really is. It's a snob market, and I can tell you that there are times in my life before the advent of fractional shares that I said, I will never own X. I will never own a Mickey Mantle PSA 8. I will never be that guy, or I will never own that Ty Cobb red, or I will never own, this card or that card. And what Collectable does, tell me if I'm wrong, Ezra, is it allows me to say I am an owner of that. It might not own 100% of it, but I'm able to have access to a collectible that previously is something that I would not have any access to at all.
You're spot on there, right? So, one data point that I think is really fascinating: 92% of the United States of America is not accredited, right? So effectively, 92 out of 100 people could never afford in a million years to own the items that we're allowing them to own shares of, fractions in, right? And again, as prices in this industry continue to get higher and higher and go up and up and up, that 92 probably becomes closer to 98, right? Yep. So, even people who used to be able to afford things, the PSA 10s of the world of low pops and amazing cards, are now feeling priced out. And we've had a lot of those people, both, the quote unquote micro investors who just want some exposure and say, I own a piece, but also people who could afford to own 7-figure assets are now coming to Collectable and say, look, it's a liquid form of exposure to this industry. I don't have to worry about insuring it. I don't have to worry about storing it or vaulting it. I don't have to worry about my wife or my kid accidentally throwing it away or throwing it in the toilet, right? So it's just a digital form of collecting and investing that is more liquid, more affordable, more diversified. So really what we're doing is we're taking widely established financial market principles and applying it to the sports collectibles industry. Right. So what we're doing in general is not revolutionary, but it's very innovative for this industry that I think really needs to be in some ways modernized and kind of.
Let me tell you about a conversation that I have with people who have not been into this, and you tell me your reaction to that conversation, and then whether or not it's accurate and what it makes you think of when you hear it. Someone who's never bought into a fractional share, on Collectable, says, I just don't see myself doing it. To me, they say, I don't see myself doing it because I'd rather own a card. I don't want to own a piece of a card. Like, what's the point of that? To which I respond every time, you think Apple is a good investment, right? You're not buying all of Apple, but do you have a problem buying a share of Apple?
Right.
And then you just get silence. You get the response is, I never thought of it like that.
Exactly. Yeah, we are used to buying fractional shares of a lot of things, right? And I think the easiest concept certainly is in anyone's 401k or sort of public market holdings. Those are fractional interests. That's fractional investing, right? You're buying a share of a company, a fraction of a company. So now it's literally that same concept applied to the sports card world or the memorabilia world, right? And people think it's really different and really out there, but really what we're doing is providing the same access, the same liquidity, the same access points that you have in the public markets to this market that I believe, and I don't know if you guys feel the same way, but you probably do. I believe this is a viable, legitimate alternative asset class, right? Where there is money to be made, and it's sort of the perfect intersection of profits and passion, right? Like, It's very fun. It's really engaging. People are very passionate, but there's also money to be made. And so you can get exposure to this asset class in the easiest form you could possibly think of, literally 2 minutes, a quick sign up, a few bucks in your account, and you're good to go. So we're incredibly excited about what fractionalization could mean for this industry. Think about it, right? Like, we're providing access points to pretty much anyone in the world over the age of 18 to participate in this industry at the highest of levels. The highest of levels, right? So,
so let me ask you, right? You did a Mickey Mantle PSA 8. What was the minimum buy-in?
The minimum buy-in on that, I believe, was $10 per share.
$10 per share. So
we take items that are so sometimes $1 million, and all you need is $10 to be able to afford to own a fractional interest in that item.
I love it. So think about this, guys, and this is for Luca Nation. The people who hear Andrew and I talk all the time about diversifying your portfolio, right? And you may love Prism cards, and you may love basketball, and you may love, different types of the market. Hell, we gave a Harry Potter play a couple episodes ago, right? I mean, you may love some real diversification, and you might want to get into the baseball card market. And what do we always say, right? We always say, do you buy the best card in the best grade possible for your budget? Well, you know what? If you were thinking about spending $1,000 on a baseball card, right? A 52 mantle, let's say, you know what you'd get? You'd get the bottom border of a PSA Authentic, perhaps, for $1,000. But for that same $1,000, you can put 100 shares in of one of the top graded examples of that same 52 mantle. You get a piece of exposure. You get to diversify your portfolio, putting in, yes, you don't own the entire card, but at $1,000, you're not owning an entire piece of any 52 mantle. You might as well get a piece of one of the top graded cards out there. And think about it this way, and Ezra, please tell me if I'm wrong. It's all you've done is the same thing as investing in $1,000 modern card. Yes, you have that card and you can buy it and hold it intangible, that entire comment. But if that card goes from $1,000 to $1,100, you can sell that on eBay or wherever else, whatever, Star Stock, wherever your platform is, and make a 10% profit on that card. The exact same thing applies when that Mickey Mantle goes up in value 10%. When the shares are traded, you can sell your $1,000 worth for $1,100. It is exactly the same thing. But why not get exposure to the highest quality investment that's out there?
You're nailing it. I completely.
All right, I try, man. I try.
Dude, you're on the ball here. Look, we completely agree, right? So yeah, you could take that same amount of money, $1,000, which you'd be buying a Prism-based card with, right? And now you can buy some of the best of the best of the best, right? Some of the stuff that has been historically completely out of price range. And by the way, where if you look at some of the data sets, the best long-term sustainable returns with the lowest correlations, the best diversify your portfolio, have been at the upper end of the marketplace, right? So for that same $1,000, you're not speculating, you're investing. And you're investing in the best quality you can possibly find with the least headaches you can possibly imagine. You don't have to worry about all the pain points. You don't have to worry about eBay and
no logistics.
You don't have to worry about bloated sellers fees or shipping your items or insuring anything. It's really just you hop onto a digital app, you purchase a share, and you wait for the secondary market to see if you want to sell it, buy more, hold it for long periods of time. It's really we've tried to make it as user-friendly and easy as possible.
So without getting into the nitty gritty on it, talk to me about that. Talk about the secondary market. It doesn't have to be the Mantle per se, because I know that was a recent-ish sale. It could be the Ty Cobb Red. It could be any of your cards. And the card itself is irrelevant, guys. But what I'd like Ezra to do is kind of walk you through it. They have an IPO, the same way a stock offering would be out there on the market, whether NASDAQ, public, or wherever else, wherever else it's traded. And it opens up at a price, $10 a share for X amount of shares. Then what happens? Is there a period where it's not traded? Is there a secondary market offering? Talk to me about the process that allows me to go from I'm putting $10 into Mickey Mantle to at some point in time, my $10 is worth $11. Where do I see that it's worth that $11? How long before that trading window opens up? How liquid is it? Does it trade every day? So walk through that for me this way. Our people who are out there who are thinking about signing up now on the app and putting in $100 in a specific card, they know what the steps in the process are.
Yep, we're actually unveiling our secondary market next Friday, so we're really pumped about that. It's going to completely change the experience on our platform. The way it works is from IPO. Once the IPO is successfully funded, typically there's a 90-day lockup period. We might be shortening that to around 30 to 60 days, but for today it's 90 days, right? So for 90 days. You will not be able to get your money out. So that's just something for to be completely transparent about. After 90 days, we'll open up the secondary market, and it'll be a true marketplace like any other. You'll be able to throw in prices at which you'll be able to buy cards, and put in prices at which you'll be able to sell whatever you purchased on the IPO. And it will be solely based on are there more buyers than sellers? If so, the price will go up. If there are more sellers than buyers, the price will go down, right? So we're tremendously excited about this. In terms of the trading activity and cadence, to start, we are going to do twice per week. You'll have what we're calling trading windows. So twice per week, each item that is eligible for secondary market will be live to submit bids and offers, and trades will be executed twice per week. We're actually the first fractional ownership company that's going to be unveiling an intraday trading period. So to take a step back, all the other fractional companies do what's called post-only mode, right? Effectively, that means you can just kind of submit your bids and your asks in the application. At 4 o'clock, roughly, they'll go in, see where the trades kind of match up, and clear the trades and match the trades. But there's no real intraday, exciting stock market trading element to it. What we did is we partnered with a true ATS, an alternative trading platform, and we're introducing what we're calling Power Hour, right? So from 3 o'clock to 4 o'clock p.m. Eastern Standard Time, twice per week, the security, the card, the collectible, however you want to call it, will literally trade intraday. And so you'll be able to have instantaneous executions where the values in your portfolio will fluctuate if you put out a bid and there's a counterparty, you know, it's immediately executed. So we're really excited to kind of unveil this next step, to be the leaders in introducing that. And again, I think the version of secondary market you see today is really version 1 of this, right? If you project 6 months in the future, a year in the future, 3 years in the future, hopefully, I think all of us are trying to get to the point where this is just a liquid 24/7 marketplace. You could wake up or be still out on a Saturday night at 3 o'clock in the morning and sitting on your couch, and you could be trading shares of Mickey Mantle the same way you'd be trading shares of Bitcoin, right? So, you know, we're excited about this. We're excited for the growth potential that it has for the industry. We're excited to kind of, you know, just make this a lot more modern, right? Just like a lot more liquid, a lot more modern. So we're pumped.
And I'm confident in just a short period of time. And guys, if you are out there listening, I would go back and listen to the last, 60 to 90 seconds, because for someone like me, now that Ezra explained it like that, it's a no-brainer. Like, I imagine for you, being the CEO of the business, you see the value prop. It's clear. And now I think you have to bridge that gap when it comes to education with your end consumer. Is that what you see kind of as the biggest challenge?
I do, yeah, for sure. Look, yeah, I think when you're involved in a business and you get it because you live it 24/7, sometimes you don't fully appreciate how much education there has to be of the consumer, right? I think in some ways we've also taken that for granted because we're not the first fractional ownership company, right? So there are other companies that have come before us. So I think if we had to be self-reflective, one thing that we have not done a particularly great job of is kind of explaining exactly how it works, what the value proposition is, what the process is, right? So that is definitely something that we're working on. And it's through doing interviews like this, podcasts like this with companies and people like yourselves who have a voice, who have a following, have a platform, who are informed, right? I think that's one of the most powerful ways that we're able to do it. But ultimately, yeah, I think once people get it, it sort of sells itself, right? There's not a lot bad with it. The only criticism we get is that, yeah, I mean, I don't own the card itself. I can't touch it. I can't feel it. But in a lot of ways, when you own a card that's this valuable, or items that are this valuable, you're not holding it every day, right? It's stored in a vault. It's in a safekeeping. It's in a place where you don't see it every day or touch it every day, right? So again, we think both for buyers and sellers on the platform, for consigners and investors, the value proposition is pretty tremendous.
You know what I'm thinking of? And Ezra, this is, tell me if I'm going down a road we shouldn't go down. And then I'll double down on it, because that's what I do on this show. I go down the roads that I'm not supposed to go down. So, you know what I think of with the collectible, especially if I'm a consigner, right? Because I get some cards you probably would fractional share. So one of the things that's come up in the hobby in the last 5 years is raffles. Razzing is what people like to say. Hell, there are whole groups with razzing of cards, right?
We get like 43 DMs a day.
Yeah, everybody wants us to be in them. Hey, be in this Raz, the whole deal. But the phenomenon, why I think it's cool is, a lot of times when you are able to open up the market to these previously not accessible items, right? And the raffles kind of do this as well, because usually they're for higher end cards, just like what you're offering with Collectable, right? So often it shows what the real value of that card can be when you have more people adding to the pot. So a raffle card, it might be an eBay card that's $1,800, but they'll raffle it at 10 spots with $250 each. And all of a sudden now it's a $2,500 card instead of an $1,800 card. And do you see that type of thing also as far as like the valuations on the card? Like, how do you value the card? I mean, like, to me, it seems like that's kind of like human nature, right? Like, the more people you're able to get into the card, the more accessible it is, the more you're able to kind of pump the value up of the card. You know what I mean? I'm not saying you're doing that, but
I'm a huge believer in the power and the intelligence of a collective marketplace.
Yes.
Right? If you think about a marketplace, really it's just a collection of people's opinions on what something is, whether it's predicted for elections, whether it's sports gambling in the Vegas market,
yep,
whether it's the stock market. Generally, I mean, there are obviously points at which the market is wrong, right? And has to correct itself. Of course, that happens all the time. But by and large, over long periods of time, markets tend to price things pretty efficiently and effectively. Right.
I guess, Ezra, what I'm saying, right, is there are only so many people out there who can spend the money, right? So you tell me Apple's worth what? How much is it worth? $1 trillion? How many people can go spend $1 trillion? Nobody.
Right.
But if you piece it out over 1 billion people buying shares, 100%, same thing applies. Let's just use a real world example. Let's just say Rob G, who we had on last week, who just bought that $5.2 million Manta, which I think is I think that's a steal, right? But I don't have $5.2 million, so it means nothing that I say it's a steal, right? Now, there's probably only a handful of people in the world who think that's a steal because I can pay 5.2. But when you do what you're doing and you say to 1,000 people, 10,000 people, we got this card here, and they're like-minded like me, and they say, wow, 5.2 was a steal. I mean, I don't have 5.2, but I have enough to buy the left-hand bottom edge, or I can buy Mickey's nose. You know what I mean? I'm willing to put this in and get a valuation of $6, $7, $8, $10 million. Whereas,
what if I want to invest in Berkshire Hathaway?
Same thing.
Right? Charles Schwab just came out with, I think they're called the Schwab stock slices, where you could put like $5 in, because like think about it, it's the same thing as investing in Berkshire. Your dream is to own Berkshire Hathaway A stock. You've told me that many times.
Yep.
But that's like 200,000. I don't know. I don't monitor.
Yeah, over three. But hey, it's funny, by the way. You just gave Ezra a great idea. There is a BRKA and a BRKB.
A lot.
There's
we've
shares
been thinking
with
about this. Yeah,
See, there you go.
I think one thing you're going to see from Collectable is we tend to be pretty innovative in terms of thinking about this as a legitimate financial marketplace, right? Yep. So one thing that we've done, which I'm really, honestly, probably out of everything that Collectible's accomplished so far, the thing that I'm most excited about and most proud of that we've done is we've introduced this concept of retained ownership for consigners. So really what that means is it's this theory that, look, in any other marketplace, you don't have to sell 100% of something, right? Yep. You could sell 25%, you could sell 50%, you could sell, right? If you own Facebook stock and you bought it at $20 per share, and now it's trading at $250 per share, and you own 100 shares of them, right? You don't have to sell 100 at a time. You could sell 5 shares at 50, 5 shares at 100, 20 shares, right? So it's this concept of you could sell partial positions. You don't have to sell all of it. We're the only company in the collectible category that allows you to sell partial ownership.
Well, I kind of like it for a couple of reasons. One, it reminds me of Shark Tank. People don't go in there and give the whole business over. They just find somebody who's willing to invest in part of it. But two, it shows me that the person who's giving you that collectible still believes in the card.
100%. And it fundamentally changes the nature of the transaction, right? So it's my personal belief, and I think we've seen it. I can point to 15 examples already where collectible investors are getting better prices than they get on other fractional companies because of this concept, right? If you know that you're retaining 50% ownership of something, you're not trying to necessarily extract every single dollar from a transaction, right? Because you still have a lot of upside over time, right? You want a fair price today. You want a good price for yourself, but you're not necessarily trying to extract every single penny from that transaction, right? So I think that fundamentally changes the nature of a negotiation. It's not, a counterparty trying to get the best deal. It's, okay, we're sort of entering into a partnership together, right? Where ultimately we want to sort of grow the value of this card together over time. And, as I think about, you brought up Rob, right, with his Manta sale. Rob, if you're out there and you're listening, right, one thing for you to consider is if you want to share this card with the public, right, you could do so on Collectable, right? You could retain as much ownership as you want and sell some to the public, and let's see what this card is really worth. Again, there are only so many people who can pay 5.2 million for this, right? But who knows how many people would be willing to gain exposure to it and see what this card is really worth over a fractional ownership company where Rob can still retain a good amount of equity and skin in the game. So
it makes sense to me, right? I believe in your business the same way I believe in Mickey Mantle's rookie card as a viable investment going forward. But you believe in it too. So if I came in as an investor, you'd sell me 5% or 10%, but you'd want to maintain the 90% because going forward, you think it's a good investment. Yep. It's the exact same thing.
It's the same thing that Facebook did, right? Zuckerberg retained some of the company in shares, and then he sold. Where does the card live?
Yeah, so we have vaults all across the country, right? So we have vaults on the West Coast, East Coast, down south, and we store all the cards in the vault. We're actually consolidating our vaults. We're building one out in New York City. It's sort of like a little showroom. So we're excited about that. But for now, it's in various vaults. Again, it's fully.
He's not going to tell you, Andrew. Just like we can't tell anyone where you're located in a secretly undisclosed location somewhere in Mexico. This way, the cartel doesn't find you.
It'd be cool to create kind of a museum aspect of it, and I think that's where Ezra was going as well.
Well, yeah. So it's funny. We have all these plans about these little pop-up galleries and exhibits and partnerships with halls of fame where we're going to exhibit some of the best items. So we're hopeful, obviously, in this kind of non-COVID environment, right? Once we're able to kind of travel and actually see people, right, live and in person, that we'll roll out some of the ideas that we have. But ultimately now it's all vaulted. Everything on Collectable utilizes best-in-class insurance. It's well protected, all that stuff. So. And look, with some of these cards, right, like Rob's 52 Mantle, some of these cards have been perfectly preserved since in crazy amounts of time, right? Like our Ty Cobb card, that card was manufactured in 1910 and has been perfectly preserved since 1910. It's actually a huge responsibility for Collectable to make sure that nothing happens to it, right? That it's so, we take every precaution we possibly can in that regard.
So Ezra, I'm going to give you something I never give anybody, which is the last word. So, but before I do that, I'm gonna do my little dance here. I won't make Ezra go into the cage match because I don't want to do that to him. But so here's what we're gonna do. So, guys, if anybody's out there listening to this and you're hemming and hawing, download the app, right? Get on the Collectable app and look around a little bit. Real user friendly, real easy.
And that's Collectable with an A. I just want to clarify that. There's two different ways to write Collectable. What's the deal?
There is. Yeah, we're Collectable, ABLE. It's spelled ABLE and it's spelled IBLE. My understanding is that the ABLE is actually more European, that in America it's more IBLE. But we locked up the ABLE domain and it's working for us.
So without getting too far into the Oxford English Dictionary, Collectable actually refers to the market of collectibles, which is, sports cards, you name it. Collectable is anything you can collect in numbers, like even keys would be collectable. But you're right about the European use. And if you go back and check out Cherry Collectibles, who we just had on, right? Cherry Collectibles, right? They use an A. The Australian, who we just had on, they use the A. So you're right, it's European, which, it is what it is. But back to the point. Get on the app, take a look, Collectable with an A, because it's all grade A collectibles that they have on there. Remember that. So get on the app, take a look, and so Ezra, when's the next thing that we're putting out there? You have something out that.
Well, we have 42 offerings that we are trying to get qualified by the SEC, and we're raring to go. So far, just for a little context, in the 3.5 months we've been live, we've done about 32 offerings, which is a really rampant pace for some of these fractional companies.
Wow.
Some of our peers have been out there for years and have done 50 offerings. In 3 months we've done about 30 in 3 months, right?
What are these offerings covered by? 30 the 33 Act, 34, 40 Act? What are they?
So it's covered by it's called Regulation A+.
Reg A. Okay.
Yeah,
Reg A+.
Reg A. So what allows us to do is to allow, again, anyone of any income bracket over the age of 18 in the U.S. Hopefully, we're going to go global pretty soon, but for now it's just in the U.S. Anyone over the age of 18 can invest, whether you're accredited or not, right? Whether you're a billionaire or someone who just wants a little bit of exposure. So again, a really powerful concept.
I love it. So guys, skate around. We're going to create a little group for this as well. This way, if you have questions, you name it, we'll have access to Ezra. We'll ask him, and maybe we'll open an invitation to him to maybe come back on the next offering he has. He could talk about it, talk about the price points, talk about the process. We can open up the questions to you guys, and maybe actually ask him some of your questions leading up to whatever the next offering is as well. But so here's what I'm going to do, Ezra. I'm going to give you the last word, and it's going to be a fun one. Do you know who Ken Golden is?
I do know who Ken Golden is.
Okay, sure. So I love Ken, and hopefully we'll get him on soon as well, right? Because Ken is not Heritage, and Ken is not Robert Edward, and Ken is not these big auction houses, right? But Ken is Ken, and Ken is now getting record prices because Ken goes out there and tells everybody why he's the best.
And he gets on TV. With the Sun, and the breaks are hilarious.
The Sun.
Always going to be the OG of all breaks.
So he's a real guy. But the point being, right, is that he's taking down some of the Goliaths of the auction house industry because he's being Ken. He's just being himself, and he's going out there and he's telling people why he's the best. So Ezra, tell everybody out there listening, and there's a lot of them, tell them why you're the best and why they should go with Collectable.
Well, look, I think one thing that is so core to what our company has done from the inception is we fight for our users, right? We fight for our users at the point of consignment. We fight for our users at the point of exit. We're fighting for our users every day in terms of curating literally the best items in sports. We're working tirelessly, right? We have this underdog mentality, which I know you guys possess also. We are not going to stop. We're operating at a pace the fractional market has never seen before. We're not going out there and just acquiring items at an auction house and sort of tacking on our fees and reselling it 2 weeks later, like some of our competitors are doing at the moment. They've done a few of these high-profile things. We're out there striking partnerships, negotiating, trying to get your users the best deals, the best possible supply, and we're not going to stop. I think what you've seen from us is we're operating at a pace again the fractional company's never seen. We're bringing innovation. We're the first company who introduced this concept of retained equity. We're the first company who's going to introduce this notion of intraday power hour trading.
Yep.
We're thinking through a lot of creative solutions. Again, we're bringing a new mindset, but also we have this fundamental love of the industry. We're focused, we're hungry, we're operating at a ridiculous pace, and we're not going to stop.
That's it. You're selling collectibles. You're not trying to sell me a car. I love it. So you're not a car salesman.
I'll tell you why, Cage. If you guys, an idea is only as good as the team behind it. And if you guys have a chance, go to collectable.com and take a look at the team, their history. From my perspective, Ezra, it's a team that loves the hobby so much, but also has a background understanding of the traditional finance system. And I want to wrap with one last thing, Cage, if you don't mind.
Yep, please.
One of the first things you said, Ezra, was we really believe this is an alternate asset class. And, for all of the people out there listening, the question that comes up time and time again is this a bubble? When is this going to end? And I'll tell you from my perspective, we're coming from Wall Street in 2008, 9, 10, 11, 12. I think what we're seeing right now with Bitcoin, crypto, sports cards, collectibles in general, is a distrust of traditional finance. And I wonder from your perspective if you're seeing a similar thing.
So it's a great question. Yes, for sure. But I'll also say, when you evaluate the landscape of alternative assets, right, there are tens of trillions of dollars going into very low yielding assets for really well-established money managers, right? So think about, bonds are yielding next to nothing with very little upside, right? Real estate cap rates are pretty low. There's just, again, tens of trillions of dollars that are all of a sudden looking for alternative places to invest. Our market, right, it's big enough for it to be dangerous, right? And for us to build, really, really big businesses in. But, it has so much growth potential. You literally capture a couple basis points of the global allocations going into these alternative investments. And you may have 10x, 50x, 1,000x our marketplace. It's sort of unquantifiable, right? Like I think really what's been missing, and I mentioned this at the top of the call, but I really stand by this. I think really what's holding this industry back in a lot of ways is a couple things, right? One is a lack of confidence, right? A lack of confidence in some ways in the sports card category. We've heard, some recent issues with slabs, right, and counterfeits. There's been a huge history of bad actors in this industry. It's been illiquid. It's been out of reach for most people, right? Like if you take an informal poll, and I've actually done this a couple of times, of some of our friends who love sports, right? Just like random sports loving friends, right? And you say, how many of you guys have gambled on a sports game in the last year, right? And it's probably like I don't know about you guys, in my group of friends, probably like 12 or so roughly have gambled on sports in the last year. You ask that same question about fantasy, it's pretty unanimous. Like probably 18 out of 20 have played fantasy sports, right? You ask the question, how many of you guys have collected a sports card in the past year? It's like 2, maybe 2, right? So in my opinion, there's no reason why that gap should exist. And so I think through companies like Collectable, where it's as accessible, as fun, as intuitive, right? I think that gap can really, really close a lot quicker than I think any of us deems possible. So you have this tailwind of just people just getting into the hobby, enjoying the hobby, loving it, understanding it. And you have also these massive financial market tailwinds to it of all this money coming in, this sophistication coming in, this liquidity coming in, right? I think those are really, really powerful tailwinds for this industry overall. And again, having people with huge platforms like Gary Vee, he talks about sports cards all the time, right? I mean, you get a couple of these people coming in, and especially with these real money managers. Like if you think about like what Stanley Druckenmiller did for the wide acceptance of Bitcoin, right? Or some of these other major investors who came in and supported this asset class. You think Stevie Cohen is buying into CLCT in the ninth inning of this game? No, he's getting in because he sees massive opportunity, right? Nat Turner is a guy who doesn't invest in the ninth inning of ball games. He invests in the first inning of ball games, right? So just think about all the tailwinds that are going on, right? And I think it creates a really bullish scenario for this marketplace. Of course, it's a marketplace like any other. I'm sure there are bubbles forming within the marketplace. That's totally normal. That happens in any marketplace. But overall, the quality stuff, the best stuff, the rare stuff, the iconic stuff, there's so much money and demand chasing so few items that I think you're going to see this market explode to prices that people don't think possible today.
I agree with that. And the thing I love about it, and Andrew, you can get at it, is the SEC portion, right? We used to say wild, wild west, the card market, sports cards, the wild, wild west, anything, you get away with anything you want, but you guys can't. It's the only area where, you got actual regulatory body, making sure that what you're doing is above board and actually providing some protection for people who are investing in it. So, I love that aspect of it as well. Go ahead, Andrew.
Ezra, the overlap of collectible sports cards and blockchain, what do you see in the next few years? Anything?
It's a great question. So we did a lot of work on that as we were kind of launching our company. We weren't quite comfortable with, well, for one, we thought fractional ownership was a little out there to begin with for this hobby, right? And then we thought overlaying a blockchain component or a crypto component with the fractional, we thought that was a little too extreme to begin with. Obviously, we look at trends, we notice, things are happening. We're always looking for, for areas to be opportunistic. For now, I think starting with what we're doing, we're seeing a lot of demand for it. We're seeing a lot of interest for it. I think it's innovative enough with also being something that people kind of understand and get and realize that they, sort of have exposure to a real tangible asset. But again, I'm fascinated, right? Like I'm really fascinated with what's happening with Top Shot and these, these NFTs and, there's a fractional ownership company, which is operating on the blockchain. So yeah, I think it'll be very interesting to kind of see how widely accepted this is. Also, there are some questions about, will the SEC recognize these as securities? And if so, their business models could be slightly in jeopardy. So there's all these questions that have to play itself out. But I think it's really interesting. I'm personally, sort of in a more forward-looking mindset where if we think, these photographs of people on pieces of cardboard are assets, and why shouldn't these digital, sort of images or however you want to call them, I don't really understand why that wouldn't be an asset in that case. So it's fascinating stuff. I think we're monitoring it. We're not there yet personally, but we could be in the future.
Because I got some cool moments from Top Shot that you can fractional share if you want. A couple rare Zions. So
look, some of these prices are getting to the point where they are fractionalizable for sure.
Yeah, we'll see. I've only been in it for 10 days, but I promised Luca Nation. They asked me a question about it a couple weeks ago, and I had no idea what it was. So you gotta dig into it. So, but Ezra, this is what we're gonna do. We're gonna leave you with, we're gonna make you promise that when you have some kind of an offering, we're gonna have you come back on and just give a quick recap of the details of the offering, just for our guys, this way they can listen to it, and you'll probably get some some new investors in it, and that's what we'd like to bring to the table for you as well, because you're right, it really is an education gap. It really is, just getting people comfortable with it. And I think you probably taken some real strides with that today. And when you actually have an item to talk about.
So we have a lot of items, right? So we have 40 something items that we're waiting to be qualified for the SEC. So as soon as those are released, you'll probably see us doing an offering every single day. But on the secondary market, some really iconic items are coming up for trading. One, we have a Jordan PSA 10 Fleer, right? We IPO'd that back in September for $100 grand. That the comps on that have been anywhere from, 220 to 250 as of late. So it'll be interesting to see how that performs.
So think about that, guys. If you invested your money in that IPO in September, and here we are, it'll be February or late January when it comes out. So less than 6 months, you will have more than doubled whatever you put in. So yes, it was a fractional piece, and you didn't own the ball, you didn't own the red border, you didn't own the Fleer crown. You bought a share of it, but if you would put in $1,000, you'd be taking out $2,200 or $2,500 if you wanted to sell. I still actually believe that card's going up, but the point is, it is a viable investment, even though you never owned that card. You never got to hold it in your hand.
Two other very, very quick points, because I think they're important. One is we've actually sold already we've exited 2 assets from the platform. We've had the opportunity to exit multiple, but only 2 of them have been accepted. One was a Steph Curry rookie card basket, which we exited for 75% profit for our investors in only 2 months. The other was a Mahomes rookie card. We exited for 35% profit within, I think a matter of a couple weeks. We got a buyout offer on a Sandy Koufax rookie card that was 70% above where we IPO'd it within literally a matter of a couple of days. We're anticipating 1 or 2 other big offers from buyouts coming up soon. Some of the other items that are coming up for trading, we have a 1953 Mickey Mantle PSA 10, one of only 2 in the world. We've been talking a little bit about Rob Go's Mantle 52 Tops 9. We have the 5310, right? We IPO'd that for $2.5 million. I expect off of the recent Mantle news that's going to appreciate in value also. So again, we've got some mammoth pieces. We got a Magic Johnson, Larry Bird, Dr. J, a 1980 scoring leader PSA 10, right? So some really awesome items are going to be coming for the secondary market debut in a matter of a couple of weeks. So I highly encourage people to check it out.
Beautiful. Thanks, Ezra.
Awesome, I'm auctioning off an Allen Ginter cage. 101.
Yeah, I'm getting one.
Starting at $1 million.
I'm going to be on Allen Ginter card, man.
I'm
You're going to be on it with me. It's a duel.
Send it our way.
It's a dual card. We're going to be on that. Now, but guys, Collectable, right? Collectable. Check out the Collectable app, right? And get on there and take a look and send us any questions you have, and we'll make sure we ask Ezra. You'll get an answer straight from the CEO.
You will, for sure.
Thanks for spending some time with us.
All right, guys. Thanks so much.
Thanks for tuning in again, everybody. We're back with your favorite podcast, Luca's Tigers and Bronze. Oh my.